Bitcoin just bounced back to $115,000 after a wild ride. But is this the start of a party or a prelude to a hangover? Today's video dives into the drama of BTC's price action, what's brewing in the market, and the levels to keep an eye on. Let's jump in. Bitcoin has recently surged back above $115,000, shaking off some resistance like a dog shaking off water. It's now in a tight range, with bulls trying to turn overhead resistance into a cozy support zone. Resistance is lurking around $116,000 to $120,000, like that one friend who always shows up uninvited. Key support levels are down at $108,000, and if things go south, $100,000 could be the safety net. Momentum is heating up, with on-chain indicators flashing green like a traffic light. Analysts are spotting bullish patterns, including an inverse head and shoulders, hinting at a potential breakout. And let's not forget the golden cross, a rare bullish signal that gets everyone buzzing. On the macro front, institutional demand is the name of the game. Spot Bitcoin ETFs are stirring up interest, and when folks expect rate cuts, Bitcoin tends to shine brighter than a diamond. Now, what's next for BTC? Let's break it down into three scenarios: bearish, base, and bullish. In the bearish scenario, if Bitcoin can't hold above $114,000 or bad news hits, it could tumble to $108,000 or even lower. Yikes, this could unfold over weeks to months. On the flip side, the base case sees BTC holding support and testing that pesky $120,000 resistance. A sideways dance could lead to a move up to $125,000, but don't forget the pullbacks. Now for the bullish case, strong institutional inflows and favorable macro conditions could send BTC soaring to $140,000 to $170,000 in the next 6 to 12 months. Some analysts are even whispering about $200,000. Talk about a moonshot. To keep track of the action, here are the levels to watch. Support around $114,000 to $115,000 is crucial. If it breaks, things get dicey. Deeper support at $108,000 is the safety net. Resistance is hanging out at $116,000 to $120,000. If that's cleared, the next stop could be around $130,000 and beyond. Indicators to keep an eye on include moving averages for potential crossovers, on-chain metrics from big holders, and macro signs like Fed decisions and inflation data. Timeframes matter too. In the near term, watch the next few weeks for support and resistance tests. The midterm could reveal whether a breakout happens or if consolidation continues. And in the long term, major moves could be on the horizon. Now, what could change the game? Rate hikes or unexpected Fed moves could throw a wrench in the works. Positive regulation helps, while negative news can hurt sentiment. ETF and institutional flows are wild cards. More inflows mean more support. In conclusion, BTC looks strong, likely to keep consolidating above $115,000. If bulls can conquer $120,000 to $125,000, a rally toward $150,000 could be on the table. But if support falters, a retest of $108,000 or even $100,000 could be in the cards. The plan? Stay bullish, but be ready. Use pullbacks as buying chances and keep risk tight. If this analysis tickled your fancy, drop a thumbs up and share your thoughts on support and resistance levels. Subscribe for more BTC updates and forecasts. The technicals and on-chain insights will keep rolling in.